Alright guys, what's up, you absolute savages? Happy Sunday. It is January 2nd, 2022, so we made it through another year, and I don't know about y'all, but I'm trying to kick some major ass in 2022, so I say we do it together. But before we jump in here, I want to thank each of you for being subscribers last year, for showing Chandler and I a lot of love, both here on the channel and over at Simpler Trading and Focus Trades. And my biggest goal right now, outside of my own trading, of course, is to give you more content this year, to do more live trading here on the channel. I'm just trying to put more effort into pretty much doing whatever I can to help shorten the learning curve, help a lot of you avoid some of the painful mistakes that I had to learn the hard way, and pretty much just doing whatever I can to help play even a small role in you becoming a better trader. So with that said, we'll jump in. We got a lot to cover here tonight. I got some football to watch, but in terms of my live schedule for this week, Monday the 3rd, I'll see all of your beautiful faces tomorrow morning. Well, I won't see your faces, but I'll see your names in our YouTube pre-market prep. So I'll be here on the channel at 8:45 a.m. Eastern, and then I'm in the options room 9:20 to 11. Ringing on the new year. Tuesday, January 4th, options room 10:30 to 11:30. Wednesday, I'll see you all again, 8:45 a.m. Eastern for some pre-market prep. Then I'm in the options room for an hour and the training room for an hour. Then on Thursday, again, I got the 10:30 to 11:30 options room. And then for those of you in my mastery, we got our typical hour and a half of live trading on Thursday. And then finally on Friday, got the opening session in the options room and 1 to 2 in the training room. And I'll talk a bit more about this over the next few weeks or so in some upcoming videos. But I am doing a class towards the end of this month on credit spreads and squeezes. Trading the squeeze with credit spreads. So definitely looking forward to that. But in terms of open positions that I'm taking into the new year here, in the mastery we got some AMD, some QQQ, some dirty old Amazon, Dollar Tree, and some Zoom. And the Zoom was from the tax loss harvest class. Let me know if any of you, in the comments here, let me know if any of you did the tax loss trading with JC and I from last Friday. I enjoy myself. And then options room trades, Amazon, Ford, Apple, Zoom, and some Roblox. But guys, until something changes here, my game plan, and keep in mind there might be some initial volatility, some downside as we head into the new year, but generally speaking, I'm looking for the squeezes in the S&P, the Q-sters, and the Dowski to fire to the upside, triggering a solid push into new highs. And that'll be my thought process until the structure of the indexes completely changes. So, as always, I'm going to ignore the news, the noise, and any potential outside influences. And probably, call it Wednesday or Thursday of this week, I will get a video posted, kind of recapping my 2021 performance, look at a few different accounts. But for my quote-unquote dedicated Simpler account, which, I funded that with $50,000 back in January when I joined the squad last year. So for that account, which was like 98% credit spreads, just about, starting balance of $50,000, closed P&L. So I did take a few open positions into the new year. Those are going to count win or loss for 2022. So in terms of 2021 performance on trades opened and closed in that calendar year, $48,000 of profits, so a starting balance of $50K in that Simpler account, ending balance of about $98,000, so 96.5% return, which I'm pretty pleased with. If I didn't try to short this effing market, it would have been a lot better. So we'll talk more about that in that video. But in terms of lessons learned and some fun facts and just, what are some adjustments I got to make this year to have, a 200% year and to just keep getting better, as the years and the years go on here. Well, the first thing is, don't short a fucking uptrend. Sorry to curse, but good Lord, don't short an uptrend. If you're a swing trader, don't short a freaking uptrend. So that's kind of the first lesson learned. Not that it was a new one. It's just every now and then you need the market to give you a good pimp smacking to knock some sense into you. So that was kind of when I look at the P&L, when I look at what I did right, what I did wrong, that's kind of the glaring thing that sticks out as far as, hey, here's where you could have made a lot more money, or rather kept more of the money that I made. So there was that. My win rate, quite frankly, is above average. And realistically, that's been the case for the last handful of years. What I need to improve is working the numbers, which we'll probably talk about in a video later this week. Another thing I want to focus on is opening up my opportunity set to squeezes and names outside of my favorites. So, I love my Googles, I love my Apples, my Amazons, but right now we got some Ford, we got some Dollar Tree, right? It's not about the stock, it's about the setup. So one of my goals is I want more trades, I want more at-bats, so to say, and the best way I can do that is to open that opportunity for, names outside of big semis and big tech to make their way onto my watch list. So long as they fit the bill, of course. Another interesting fact, 95, probably closer to 100% realistically, but let's call it 95% of my trades were credit spreads. And I thought this was kind of interesting from I don't even know what kind of perspective. Kind of ridiculous, I suppose. Between all of my accounts, though, I closed about $70,000 in profits trading the... kind of ridiculous. Trading the Amazon weekly squeeze with credit spreads. Amazon was up 2% in 2021. So don't get me wrong, I'm thankful, right? I'm happy about that. But it's like Amazon didn't do shit this year. So again, I like my Amazons, I like my Googles. Probably an easier way to, make some progress there. Instead of just tying up capital in a total chop fest, collecting some premium. But anyways, that video will be out, Wednesday or Thursday. Show you some account statements, all that good stuff. But quite frankly, it's January 2nd, so we're in the new year. I'm trying to focus on how I can do better this year. And with that being said, we move on. In terms of scan results, then we'll open up the charts here. Big 3 buys. So this is the indicator I've been working on. I got a scan going for it, some buy signals, few different things that I'll keep to myself for now. But in terms of some results from that scan, good stuff here. Qualcomm, Ford, Dollar Tree, Zebra, BJ, Slab, MP, and Flow. Some weekly squeezes for you. Google, Amazon, TSM, Starbucks, Caterpillar, Ford, SPY, QQQ. 3-day squeezes. Google, Amazon, TSM, Starbucks, CAT, BJ, MP, and then daily squeezes. VGoog, Ford, AMD, Nvidia, Qualcomm, the semis, the S&P, the QQQ, and Dollar Tree. And in terms of the sectors I'm going to focus on here, still going to focus on SMH. Right? We'll take a look at that chart here in a second. XLK has a bullish daily squeeze. In terms of ITB, the home builders, I would love to buy the dip there. The industrials got a good looking daily squeeze. Utilities looks pretty strong. I'd like a dip there. And then XLY, not a bad looking daily squeeze. But there you go, guys. There's a schedule for the week. A quick glimpse at 2021 performance, at least from one of my accounts, and my general focus here heading into the month. So if you want, you can come back, watch a video, pause it here at a few of the scan results. Go on ahead and see if there's something in the scan results that you fancy. Otherwise, let's jump into some charts here. All right. Good timing here. The futures just opened up, so you gotta love when a plan comes together. So in terms of your S&P, your daily squeeze is already fired here. And last week, during the last week of the year, low volume, a little bit lame, but you hold great structure. So we're chopping here at the AEMA, and we have 4-hour, 2-hour, 60-minute, 30-minute, 15-minute squeezes. So right now, I would look for the AEMA to be support, and then as we head into tomorrow's open, I would look towards that 30-minute, 1-hour, 2-hour squeeze. See if they can't fire to the upside and start to trigger that next move into brand new all-time highs. But good looking structure here. And your futures are up about 1/3%. I see the QQQ futures. Let's clean up the drawings. But your Qs are up about 1/3. Similar structure, beautiful daily squeeze, and a little bit sloppy last week. But you hold support here at the AEMA, and along with your weekly 3-day and daily squeeze, you got a 4-hour, 60-minute, 30-minute, and a 15-minute. So the same scoop here. Look for your AEMA to be support, and then into tomorrow, into Tuesday, Wednesday, look for your lower time frame squeezes on top of support to potentially fire to the upside and get the party going. Vice versa, they might fire to the downside, taking you a little bit closer to your 21 EMA. But great structure here for the Qs. We'll check out the weekly chart, because that's a thing of beauty. We have green 10x bars. The 3 days thing of beauty. The 2-day looks really good. So there might be a little bit of back and forth early this week. But as of right now, I think the QQQ will be trading at a brand new all-time high. Take a quick look here at the Dow. I know all of you love the Dow. We got a lot of Dow traders in here. Nice daily squeeze. Good structure. What just happened? The video cut off. Display driver stopped, responding, and has recovered. Alright, I think we're good. The Dow here, right? Good daily squeeze. Same thing. Little quiet last week. You hold your 8. 4-hour, 2-hour, 60-minute, 30-minute, 15-minute squeeze. Right, so sometimes I notice traders get way too antsy if we don't go higher every single day. Right, so just kind of take a bigger picture view. You get a big initial push. You dip to your 8. You hold structure. You get stacked EMAs. You get a bunch of squeezes. It's all good stuff here. Right. That 2-hour squeeze could easily take you into brand new all-time highs. So good structure here for the Dow. Good job, Dow. Man, you know what, guys? I mean, I'm not going to trade this, but the small caps, they don't look terrible. As Charles Barkley would say, they don't look terrible, Ernie. They're back above the 21. Positive histogram. That's just about it as far as what looks appealing here. But I think we've been talking about this over the last month or so. Your Qs look good. Your SPY looks good. Your Dow looks good. If the fourth stepchild here, the small caps, can just stabilize, good for the rest of the market. And as of right now, they're doing a pretty good job of stabilizing. So there, my friends, is a quick look at your indexes. Outside of the chop fest known as the Russell here, your QQQ, your Dow, your S&P, they got the big three right now. Almost, right? They definitely have trend. They definitely have structure. Momentum continues to be a work in progress, but it's pretty solid. So until something changes here, I'm looking for brand new all-time highs everywhere except the small caps. So in terms of a few good-looking spots here, we'll start with Ford, because this is an example of something I want to focus on this year. Right? It's not big Amazon, it's not big sexy Google, but it's a great uptrend. I got my buy signals. You got your stacked EMAs. It's as good as it gets. So I do think you can see Ford trading higher here into Q1 earnings. Another one here, kind of off the beaten path, is Dollar Tree. Trend, structure, momentum, buy signals. So I also think into Q1 earnings, Dollar Tree could be traded into brand new all-time highs here. But then we got to jump over here to the semiconductors, right? So this is a group here. Yeah, and remember when you had the final Fed meeting of the year, and it's kind of like, 2 to 3 week period back here. It's like every day something is, quote unquote, going to cause the end of the bullish market, right? So there's news, there's all kinds of BS. Every single day, I'm getting a buy signal here. So as long as that's the case, and you got stacked EMAs, you got green 10x bars, and a positive histogram, I'd look for this daily squeeze to trade into brand new all-time highs. So if you look at a few names here, a couple of them already did it. Micron is beast mode. Yeah, I'm not going to chase Micron. But Micron is beast mode, right? So that kind of got the job done. Broadcom, Savage, ON Semiconductor, Steady Eddie, Little Lamb Research, very solid. So the group looks really good here. I'm not going to chase for, I'm not going to chase a Micron or a Broadcom. However, all the comms here. But if you look at Qualcomm, there's an entry. Buy signals, daily squeeze, good structure, but you're trading at the 21 EMA. So right now, I think Qualcomm or AMD, two great-looking daily squeezes, shaping up at the buy zone. So if your SMH fires its daily squeeze, breaks above the previous high around 319, and trades into new highs, I think Micron, Broadcom, they continue to trade higher, but then I think Qualcomm and an AMD here could finally see their own daily squeezes get something going into about 2 ATR to the upside. and I'm sure some of you are watching NVIDIA here. Again, if the semis can break out, NVIDIA probably doesn't roll over. However, for what it's worth, up to this point, they are definitely favoring Micron in Broadcom, in LRCX. So just because the group looks bullish doesn't mean that NVIDIA has to play catch up here. But I would continue to watch a daily squeeze at the very least. For what it's worth, I'm not getting any of my buy signals here. I am getting them early buy signals in AMD and in Qualcomm. But the semis, I think they're poised for a move into brand new all-time highs. Ideally, you're trying to get long well before that happens. So don't go out there chasing, a 2 to 3 ATR. It's just not going to serve you well. So the semis look pretty good here. But then, your XLK, your QQQ, just kind of big tech, I think looks really solid as well. So for Apple here, I do think Apple could break into new highs, and I do think you could, get that 183 target where Apple becomes a $3 trillion company. I'm going to probably for, a swing trade, because I already got a little bit of Apple there. For a swing trade, though, I think Google potentially is the next one setting up for a pretty big move. So you got a great looking daily squeeze. You've got a beautiful 3-day. This is actually perfect. So it doesn't mean that it has to work, but damn, that thing's perfect. And then the weekly squeeze here, wow, beauteous. So I think Google, very much like Apple right now. So before Apple kind of exploded, you had the same thing. Uptrend, bullish momentum, but that big bad triple squeeze. The weekly, the 3-day. If you want to count a 2-day, then we can call it the quadruple squeeze. The daily. And then inside the daily squeeze, you had a 4-hour down to like a 30-minute. So total squeeze fest there. And Google, very similar structure. Good looking trend. Good looking momentum to your bigger time frames. And you have a weekly 3-day daily squeeze. So what I would like to do, probably for, February expiration, is just start chipping away here at a position. Tough thing with Google, though, man. The spreads are a little bit nasty. So, a debit spread might suffice. In the money put credit spread, that might work as well. But I just think Google here, until the structure completely falls apart, could be the next FANG stock setting up for a pretty solid move into brand new all-time highs. And I think you got your bases covered there. Again, I think your home builders, don't get me wrong, this is as bullish as it gets, but I already missed the easy move. So to me, the easy move is to move from the 21 EMA into about 2 ATR. So you could get long here, you could make money. Over the course of, 100, 200 trades, it's not going to be an entry that serves you well. So the reason that I like SMH and the QQQ right now so much, aside from trend, structure, momentum, they're trading at the buy zone. So I can pick them up here and take full advantage of that move into 2 to 3 ATR. Where with the home builders, well, you're already up here at 2 ATR. With healthcare, the ship already sailed. So I think SMH, I think QQQ, they've got the characteristics of a squeeze right to the fire to the upside. But what's working to our benefit here is they're still trading at the buy zone. So assuming we don't gap up or down tomorrow, I think you got your opportunity here to scale into a position. I think you give it until the end of January. And until something changes, I'm looking for these daily squeezes to take us into higher prices. So that's what I got for you guys tonight. Hope you had a good weekend. I hope you had a good, safe time on New Year's Eve. I think I was asleep by, 10 o'clock, 10:30. I was up the next morning about 5 a.m. running my scans. So to me, that's the best way to end a year and start a year. Go to bed early, wake up early, get the scans going. But that's what I got, guys. Looking forward to this year. Right? I got huge expectations, for my trading. For those of you in the options room, and especially for those of you in my mastery, I've got huge expectations for all of us. And I got big expectations here for the channel. So let's kick some ass this year, y'all. But go enjoy the rest of your night. I'll see you tomorrow morning at 8:45 a.m. Eastern. We covered a few setups here tonight, but tomorrow morning we'll dive a little bit deeper, price out a few potential trades, and then as always, I'll turn things over to all of you for some Q&A and chart requests before the open. But I'm looking forward to that, so I'll see you all then. Go on ahead now and enjoy the rest of your night. Talk to you soon.